Hey everyone, Jeff Dorman, CIO of ARCA, back again for another edition of That's Our Two Satoshis Live, where we talk about everything every Tuesday happening in the digital assets market. And as always, we write a nice long blog on our website as well, ar.ca/blog, for those who like to see more charts, get deeper into the weeds and kind of what we're talking about, what we're researching here over at ARCA. As always, from a compliance standpoint, this is not investment advice, but we will be talking about what's happening in the markets because there's a lot going on, or actually, in some ways, very little going on, but a lot of volatility based on very little. So let's talk about first last week, Bitcoin Strategic Reserve. I'm sure everyone saw a lot of news on that, but President Trump signed an executive order on Thursday last week talking about establishment of the Strategic Bitcoin Reserve and the United States Digital Asset Stockpile. Honestly, there's only all you need to know about this is that the Treasury Department will operate the reserve, and that'll be capitalized with Bitcoin held by the U.S. government from forfeitures. It may also include future purchases, but there will be no sales. So objectively, seems like a good thing if you like Bitcoin. The stockpile is similar, but it includes other digital assets beyond just Bitcoin, but there will be no future purchases there. And the Treasury has some latitude to actually manage that portfolio, i.e. they can absolutely sell it. So look, the market sucks right now. We all know it. Everything's down. It doesn't matter if you're a meme coin or a real cash flow producing asset. The market is just not differentiating right now and everything's lower. But objectively, this looks like the best possible version of what could come out of an executive order like that, right? Because, only Bitcoin is in it. And again, whether you care about Bitcoin or not, at least it's, similar to other stockpiles and reserves that the government owns, things like gold, things like oil. There's really no reason why there would be a reserve with any other assets besides Bitcoin. Again, I think most of you know I'm not a Bitcoin maxi. I actually think there's way more to digital assets in terms of capital formation and customer bootstrapping and incentives and value creation way outside of Bitcoin. But if you're looking for something for the government to own, Bitcoin's really the only one that makes sense. And they specifically called Bitcoin digital gold and highlighted its scarcity and security. They can also buy more Bitcoin in the future. And they are no longer going to sell the seized Bitcoin on the open market. For those who don't know how much that is, that's about 200,000 Bitcoin, which is about $18 billion worth of seized Bitcoin that's on the government's balance sheet right now. So for those who've been following us for years, you know that every single time the U.S. government sells or hints at selling, the market goes down. So at a minimum, independent of anything else, the fact that they're not selling that on the open market right now should be a net positive for the market. Again, market sold off anyway. Obviously, we are no longer making rational price moves based on crypto-specific news. Really, there's been two parts to the sell-off in crypto. The first was January 7th through about February 19th, where really we were selling off on just crypto-specific stuff, right? Mostly meme coins and, the death of Solana and, obviously Solana being anointed the golden child, but being, a house of cards based on nothing but meme coins thus far. When the meme coin rug pulls started to happen, people soured on Solana and all the dexes on Solana, et cetera. That was really what caused the first leg of the downturn. Post February 19th, that's when the equity market started to have a real temper tantrum. The NASDAQ down well over 10%, the S&P down almost 10%. What was interesting about this is this was the third fastest 10% drop in history for the NASDAQ. The first was COVID in March of 2020. It took 6 days for the market to drop 10%. The other one was the Great Financial Crisis in October of 2008, where the NASDAQ fell greater than 10% in 8 days. And then this one on tariffs in February of 25, when literally everything else happening in the economy is totally fine right now, the NASDAQ fell over 10% in 9 days. The fourth one, for record, was in tech of 2000, in April of 2000, 13 days for the NASDAQ to fall 10% during the dot-com bubble. So might be a little overreaction. Look, markets go up, markets go down. I actually think, there's probably from a valuation standpoint, a lot of tech stocks were overvalued anyway. But what's interesting is just how fast sentiment has really changed, right? Basically, sentiment among individual investors, as indicated by the AII poll, showed the percentage of bulls was only 19%, which is lower than 98% of historical readings. And the percent of bears was 61%, which is the seventh highest reading in history. So again, two parts of the crypto sell. First part, meme coins, Solana, everything related to that. Second part now, just a complete fear trade in the global economy, which is just sending equities flying to the downside, as well as the VIX higher. So, if you want a silver lining here, though, fortunately for long investors, the market gets this wrong just about every time. The sentiment indicator is now touching, like I said, 1990, 2008, 2009, 2022 kind of lows. every single time sentiment hit these lows, that marked the bottom in the market, and the stock market was up 52 weeks later every time, on average about 25% higher. One time in March of 2009, about 70% higher. So if you're looking for a golden, silver lining here, or what it means, look, fear-based trades without substance are always buying opportunities, right? There's a small occasion here and there where sometimes fear actually turns into fundamental problems because the fear gets so bad and the market goes down so far that it actually starts to hurt fundamentals, meaning companies start to pull back on spending, actually start firing people. Individuals start feeling their net worth going down and therefore slow spending. But for the most part, when you have absolutely nothing wrong right now in corporate America, which is what we're seeing, right? We're seeing the dollar lower, which is good for corporations. You're seeing interest rates is lower, almost 70 basis points lower from the highs. That's good. You're seeing credit spreads barely widening at all. So, usually when you have a real fundamental problem, credit leads equities, not the other way around. The fact that credit spreads are doing nothing is pretty bullish. We had great fourth quarter earnings, no issues really with any sort of economic data right now. It's been mixed to positive at best. Recent PMI data showing expansion rather than contraction. Jobs data has been okay despite all the Washington layoffs. So look, long story short, this is a temper tantrum by the equity market more so than anything real. We also have pretty much global stimulus happening right now in Germany and in China. Germany unleashing an anything it takes campaign, which is a big divergence from the historical hawkish fiscal stance. So look, whether you believe in the Reagan parallels, meaning, go back and look at our blog from a few weeks ago, shout out to David Nage who wrote it, talking about how, the market right now is tracking exactly what happened in Ronald Reagan's first term in the early 1980s, where short-term pain leads to long-term gain. But again, objectively, there's just not a lot of substance right now. Most of the crypto news is positive in terms of what's coming out of Washington. Almost everything coming out of the economy is positive, other than the fear with regard to tariffs and some of the Washington overhaul. Most likely this looks a lot like, call May, June 2021, or even kind of end of 2018. Both periods were, again, buying opportunities for global markets. Because again, it was fear and not substance. So it seems to be tracking that right now. Although I will say that the crypto reaction is certainly a lot bigger and deeper than I would have expected. Anywhere down 50 to 80% on a fear trade is certainly substantial. Elsewhere, I think a lot of you who follow me on Twitter probably saw that I put out a tweet storm maybe a couple of weeks ago talking about the 12 hills that I'll die on when it comes to crypto. Look, I put it in the blog as well with a little bit more detail. You've probably heard from me a little bit more increase in my frustration level, not because of falling prices, but really just because of just how far we've gotten away from a cohesive understanding of digital assets. I feel like over the 7 years I've been writing my blog and running ARCA's funds, that we've been talking about common sense topics and debating people, on pretty objectively pretty objective takes, I guess, on sort of crypto, what works, what doesn't work, why this is an important industry, et cetera. But I'll finally put it all in one place. So I would encourage people to go to the blog, look at the 12 bullet points I put on there. But there's a lot of things happening in the crypto market that I wish more people would understand, and not just relying on what's happening in the macro market, or assuming that Bitcoin is the only part of the market. So just for a couple of them, I'll read a few of them here. Number one, I still think crypto as an investment and blockchain as a use case is completely binary right now, meaning we know the tech works, we know it's better, it's faster, it's cheaper. We know that eventually this is going to be the medium for all asset transfer. The problem is 99.6% of the world's assets, meaning stocks, bonds, real estate, et cetera, are not on chain yet. So blockchain is going to grow, and it's going to grow massively, 10, 50-fold in my opinion. But it's not going to happen until you have better assets on chain. Number two, and I will say this till I'm, until my deathbed, crypto is just a wrapper, right? It houses all asset classes. We have equity-like tokens like, BNB and Hyperliquid. We have debt-like tokens. We have currency-like tokens like, obviously Bitcoin. To say anything in a blanket way, saying, crypto, we do invest in crypto, or we don't invest in crypto, or crypto's going higher or lower, it's just as insane as saying, we do or do not invest in ETFs. Like, it makes no sense to talk about crypto in any sort of a generic way, because every crypto asset is totally different. It's much more like fixed income than it is like equities, right? You have all kinds of different permutations, tokenomics, inflation, et cetera. Everything is different. Everything is unique. And the fact that we're still 7 years, after ICOs came about, talking about this generically about that, as if it's all just one asset class is just insane to me. And I will not put this to rest until other people start to recognize the differences in these tokens. The other thing I think I really truly wish other people would start to talk about is what actually makes a token valuable. In my opinion, this is actually pretty easy. There's only three forms of value in the world. One is financial value, meaning free cash flow, right? Can you actually generate revenues and profits, and in some way, shape, or form give those back to investors, whether that's via dividends or buybacks or R&D that leads to higher ROI eventually. But you need some sort of financial value. Second is utility value, meaning is this useful? Can you use it in some way? Can you pay gas with it? Can you use it for collateral? Are these miles or reward type points? Like airline miles or Starbucks points. Basically, if you have utility, then that means some percentage of that token at all times will be held on people's balance sheets because they have to use it, right? The US dollar is useful. Most US dollars sit there idly doing nothing, but that takes money out of circulation. Same with things like ETH and Solana, right? They have utility. The fact that most people have some idle ETH or SOL sitting in wallets, right? That's a demand sink. That means the more valuable these networks are, the more of these tokens are going to be basically sitting idly doing nothing. So that is real value. So you have financial value, you have utility value. The third type of value is social value. That's a cool factor, right? Some sort of community factor. Now, obviously, meme coins are only social and not at all financial and utility. That's why I don't care about them. It's really hard to value the social part of it. I certainly don't think social alone is worth hundreds of billions of dollars, which is what that meme coin market is trading at. But social as a second or third component of an otherwise valuable token is pretty important, right? Again, we'll use Solana as an example. Solana has real financial value in the form of MEV. It has real utility value, as we already discussed, and there's some sort of social cool factor being involved in Solana. So if you can't define one or more of these value drivers, then the instrument does not have value, plain and simple. And if the only value you have is social value, good luck to you. It's not going to last very long. So again, we went through a lot of other things on this as well. I encourage people to actually read the blog as we go into more detail, but I'll leave you guys with one more that I think is really important. If you're using CoinMarketCap or you're using CoinGecko to look at the market caps of these tokens, just know that the industry is doing this 100% incorrectly and has been forever. Really simply, the market cap should be the total amount issued, including all locked tokens sold to VCs, any tokens owned by the team and employees. You have to include that stuff. Just because it's not part of the float, meaning the amount actually trading, doesn't mean it's not part of the market cap. So all these massive Solana unlocks that are coming, that's part of the market cap, right? Athena, all these massive unlocks that are coming, that's part of the market cap. So anybody who's listing a market cap and not including the stuff that is already issued but not outstanding is just wrong, right? Market cap is much higher in a lot of cases than what is being reported. Now, the FDV, or the fully diluted value, that's different, right? That can include unissued tokens sitting on the company's balance sheet. Meaning, if I create a company and I say I'm going to create 1 million tokens and I'm going to sell 500,000 of those million tokens to investors, of which 200,000 are going to trade immediately and 300,000 are going to be locked up by VCs and 500,000 are going to sit on my balance sheet waiting to potentially be issued at another time. Well, right there, the float is only 200,000 tokens because that's what's actually trading. The market cap is 500,000 tokens because it's the 200,000 actually trading plus the 300,000 that are owned by VCs and others that are locked. That's still part of the market cap because those tokens are coming on the market at some point. But the FTV is 1 million tokens, right? That's the total amount that I could, in theory, issue, even though I may or may not ever issue it. That's no different than every company in the history who has stocks or bonds. You can issue more stock, you can issue more bonds. So it's pretty irrelevant. FTV is just an irrelevant metric. You don't care about FTV. All you care about is market cap and float, and that's it. And I encourage CoinGecko and CoinMarketCap to get this right. This is not a hard concept. Stop putting incorrect information out there at all times. So again, I'm not going to go through all 12 of these. I think there's some pretty interesting things in here, including some thoughts on what it means to be a security and MicroStrategy, as well as the taxonomy of different sectors. So I encourage people to go look at it. Shoot me a line, tell me what you think about this stuff. But I'm just so fed up with misinformation. I'm so fed up with this people not understanding what this digital asset market really is beyond just Bitcoin. So we put a lot out there, and I hope it helps you guys as you're thinking about doing your own research and your own thoughts on this market. So shout out to David Sachs if you're listening. I'm sure you're not. A lot of this stuff is common sense. And if we actually educate the market a lot more on what crypto and blockchain really is, we probably will have a much stronger and more robust market in the future. So that's it for this week, guys. That's our 2 Satoshis. Check out the blog, hit us on Twitter, and we'll see you next week. Thanks, everyone.